Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then, of course, bounce on the market and look for something to trade. Well, here's the market over the last few weeks. You can see in the last couple weeks it's kind of been trending back up. It's at all-time highs. Volatility is pretty low. So apparently everything is good in the world according to the market at least. And if we look at the NASDAQ, it looks fairly similar, although it took a couple of small ticks towards the end of the week. But really, from start to finish for the week, it kind of went nowhere. But it also hit all-time highs during the week. The only one that looks different, as it always does, is the Russell. It's still not near its all-time highs and essentially went nowhere for the whole week as well. Volatility is a little higher in IWM. So what are we going to trade this week? Well, we're heading into earnings, so I want to learn a new skill. Let's learn how to trade earnings. So what we're going to do is we're going to go to SBUX, which has earnings Tuesday after the close. And here's how we trade earnings. You can see right here volatility is super high, and that's because we're leading into earnings. Easy to see, like here's earnings, here's volatility. Here's earnings, here's volatility at its highs. And that's because it's what they call a binary event. It's a one-day event. We don't know what's going to happen. And when people don't know, people are scared, volatility shoots up. So this is common. Anytime earnings season happens, you're going to see huge jumps in volatility. So the way we trade earnings is it's a one-day trade. It's a trade we put on in the last 30 minutes of the market before it closes, and we take it off the next morning in the first 30 minutes that the market opens. So it's a win or lose. Either we're right or we're wrong. It's a one-night, one-day trade, and it's a high-risk, high-reward trade for that reason, because it's either going to be a loser or a winner, and then that's it, game over. There's no duration over direction like we usually like to play. So how do we make an earnings trade? Well, we start by doing this. We start by always going to the shortest expiration cycle possible. In this case, it says 5, but in 2 more days when the SBUX is having earnings, it'll say 3. So we're going to start by going here. Then we look at the price. And in this case, this software tells me what they call the market maker move. Now, this is obviously going to change on Tuesday just before the close because the stock's going to move around and whatever. But what this means is market maker move. This is expecting the stock could go up or down $5. It's a $10 range. It can go up or down $5. So the way we do it ourselves when we get to obviously a Tuesday afternoon is because we don't know what it's going to be. It's going to adjust. A simple shorthand formula, and it's not exact, but it'll give you a ballpark, is we go to what they call the straddle. So this is essentially $93. The straddle is just buying and selling the call and put at the same time. So what we do is, we're going to sell the straddle. This is what we're going to do Tuesday afternoon to get a rough idea of price. And you can see it says 543. Now to work out a more accurate idea, what we do is we take the total straddle price and we multiply it by 0.85. Now this isn't exact. Like I said, this is just going to give you a ballpark on that day because not everybody's going to have this market maker move available to them. And when we do this, we get something around, I think, like 460, 470. We'll say about 470, which you can see is pretty close to what it is here. So we're just going to round these numbers up. So whatever you come up with on Tuesday afternoon, just round it up to get a bigger range, let's say. So it's about a $5 move is what we're looking at. So what we like to do when we make earnings trades is move to the expected range because we obviously want to stay out of that. The market's expecting it to stay inside that range, so we're going to do the same thing. So $5 down from this 93 is around 88. So we'll start our iron condor by going to 88 and make it $2 wide, so 88.86. And then $5 up from here is 98. So we'll go to the 98, sell that short strike, and make this $2 wide as well and go to 100. This is our $2 wide iron condor at the expected move. $5 away, $2 from there, iron condor. And in this case, we don't care about rules as far as 33 to 50 cents per dollar width. Because it's a one-day trade, we'll do this trade at whatever number we're happy with being above. As an example, if this was 50 cents, would I make this trade? Me personally, that would be the absolute minimum amount of credit I'm looking to do this trade for. Because remember, again, this is a one-day trade. So that $50, you can probably make, if everything goes your way, $25 to $30 the next day. So it's a big move, high risk, high reward. You can also lose 50, 60, $80 the next day as well, right? So again, we don't need to collect any specific number. It's a number whatever we're happy with trading. Because remember, if this was 50 bucks, that means I'm risking $150 to make $50. Am I okay with that? Totally up to you. But I'd say 50 cents is the least amount of money I want to make this trade for, because I have to have at least enough credit to make some money on this trade. So if I go down to $20 or $30, there's not much room for me to make anything. So 50 is the least. Doesn't matter to you if it's 40, whatever. Again, it's totally your choice. Personally, 50 cents or more on a $2 wide iron condor is the minimum I'm going to take. So what we're going to do is we're going to place this trade in the last 30 minutes of the trading day. The reason we do that is we want to make sure it's centered. If we do it too early in the day, this stock could move all over the place by the end of the day, but by the end of the day, it's going to basically be where it's going to be. So the last 15 to 30 minutes, we know the stock is there. We're going to make it equidistant away, kind of thing, based on the expected move, and then close and open that trade. The next morning, in the first 15 to 30 minutes, once the market opens and things settle in, we're going to close that trade, because this isn't a buy and hold kind of thing. This is a one night, one day trade, all or nothing. Either we make money or we lose money. So we close it, winner or loser, no matter what. So that is how you make an earnings trade. This will be SBUX on Tuesday afternoon, closing Wednesday morning, again in the first 15 to 30 minutes of the trading day. I am excited to let you know I've completed a book that is now available to everyone that wants to get it, called Learn to Trade in 7 Days. This is a book that will take you from absolute ground zero, as far as knowing absolutely nothing about options, all the way to trading them. Now, I'm so intent on getting this book to you because I really believe it is such a valuable resource for anybody and everybody that I'm going to offer an incredible deal on this, so stick with me on this. But before we get there, I want to show you what the book entails. The book is broken down into 7 days. Day 1 being, what is an option? You'll learn everything about options themselves. We'll compare stocks versus options. Then we'll get into basic option strategies like the vertical. And finally, we'll wrap it up with how to trade verticals, and then the making and managing of trades, which is to me the key to success long term above all. Now, as I mentioned, if you get into it now, if you go to this link, you can get this book for only $9.99. And I know that may not appeal to a lot of people because a lot of people aren't into books, but I'm so intent on getting you this book because I really believe it is such a valuable resource to anybody and everybody that I'll also throw in any one of my courses right here available on Udemy right now. So for only $9.99, you not only get the book itself, but you get one free course, which can be valued for as much as $100 depending on when and where you buy these courses. Again, just go to this link here and it'll take you to this page where, as you can see, you'll get the book and one of my courses for only $9.99. So really can't be beat. So again, just to reiterate, go to this link here. You will get my book, which you can hang on to forever, and I really believe is such a vital resource. I'm throwing in a course to really get you motivated to buy this book. That's how important I really believe this book is. The book and one of my courses for only $9.99 simply by going to this link. Please jump on this opportunity. It is something you really will be happy you did.